Hello everyone, welcome to the Ichimoku.co Daily Futures Market Review for the trading day ending Tuesday, January 27th. Firstly to gold futures, and here we see a continuation of the trend to the downside for today's trading. A candle that's made a lower high and a lower low, but a shift in net momentum away from the sellers from the previous day's trading back to the buyers. The buyers have also closed with control, and this suggests a possibility of a change of trend to the upside, with this candle closing up between the midpoint level and the high. Buyers closing with control and showing some strong commitment to take out the 1284.9 level of previous support. The market also found support down at the 1273 level, and at the moment, as this current candle develops, we are seeing some selling coming in, but we'll be watching 1284.9 to act as support for this candle, and possibility of the market testing back to this 1300 round number level. We've seen the market test above or almost to that 1300 round number for the past 3 trading days, unable to breach that area. So that is going to be a very important level moving forward. But we do have a bullish market in all 3 timeframes, trading above the cloud, the Kijun Sen and the Tenkan Sen, supported by the Chikou span, and suggesting that the next move here is likely to be to the upside as long as the buyers have the strength to breach that 1300 round number level. Now, just looking at the Fibonacci Extension tool, and here we're examining the relationship of this current first time frame downtrend that the market's in to the immediate previous time that the market was trending down. And for the second consecutive trading day, we've seen the market testing to or just below the 161.8% level, and with price action being rejected very strongly from that area today, with the buyers taking control and the momentum in net terms shifting to the buyers, it does suggest that there is a very real likelihood of the trend changing that first time frame. So we'll be looking for confirmation of that, with the market making a higher high and a higher low. Just taking a quick look at the bands here, and here we see for the second consecutive trading day the upper band holding as strong support for this market, bouncing off in a typical fashion, setting the market up for a change of trend here. The buyers coming in solidly suggests that combined with the trading activity up above the upper band highlighting the strong bullish bias, suggesting that we are likely to see a change of trend to the upside. Now, if we do see selling come in to the market, watching the upper band at 1286.4 to once again hold as strong support. Moving next to NYMEX oil, and here we have seen a change of trend today, with this current candle that has finished trading, forming a higher high and a higher low, a very small range candle, so it suggests that there's not a lot of eagerness from the buyers here, but it is pretty much in line with the size of the range of the past week's trading. What we have seen, however, is the shift away from this doji type candle, a candle of indecision, to a slightly larger white body candle. So the buyers have shown a little bit of strength by changing momentum from this downside to indecisive back to the upside. And so net momentum here is the white, represented by the white body candle. The buyers have made net progress between the open and the close, and that's a positive for the buyers. The only problem here is that they've failed to close with control, and they've closed around the midpoint level, and it suggests that the buyers certainly aren't as strong as you'd like them to see on the initiation of a new first time frame uptrend. We have seen selling come in at the 46.72 level, previous support and resistance level, and moving forward, that's going to be very important for the next day's trading. If the buyers are strong enough to breach that area, we're also likely to find strong resistance at the Tenkan Sen indicator, trading around the $48 level, and that indicator has held a strong resistance in the recent past. But here to the downside, we also saw support coming in at 44.78 again, and that is going to be a very, very important level. And if that area is breached in a strong bearish manner, it suggests that there is a possibility of NYMEX oil trading significantly lower, because there's no well-defined areas of support between this 44.78 region and the 32.64 area. So here we have a market that's caught between this close by support, strong support 44.78, close by resistance 46.72, waiting for resolution in either direction. Now, there's also a possibility of a pattern forming here, and as with all patterns, we always require the trending action leading into the pattern. And here we have a very significant downtrend, as everybody knows, but we have these two troughs pretty much around the same level, the intervening peak, and if the market can close above that intervening peak, we'd have the completion of a double bottom pattern. The market's not trading anywhere near that peak though. There's a lot of price action to the upside to go before we're anywhere near completion of that, but just highlighting the possibility of that, just looking forward, if the buyers are strong enough, and the target would be the depth of the pattern between the intervening peak and the troughs here. Now just looking to the bands here with NYMEX oil, and here once again we've seen the market failing to breach that lower band, and it's held as strong resistance for the past 4 or so consecutive candles. The market testing within there and closing just around that band, but still not closing within the bands, and suggesting that that is still a very, very important area of resistance. Now if we see a strong bullish close within the bands, then we could quickly see the market testing to the middle of the bands around the $48 level, around $48.12 actually. So that is going to be some important trading coming up over the next day, and selling off from the bands in a strong bearish manner and potentially down through the lows of these candles would suggest a resumption of that very strong medium-term bias to the downside. Moving next to wheat futures, and here we have a continuation of the trend to the downside. This candle has a much smaller range than the previous. It suggests that the sellers are still eager, but certainly not as eager as they were previously, so it raises some doubt about continuation of the trend. But the important thing here is the reduction in the size of the body, and previously we had a fairly large black body highlighting a strong downside momentum, and it did seem as though the sellers were building to breach this 516.50 level. For today's trading, however, they've tested 2 there, and we've seen some price rejection coming in. Even though the sellers have taken control of the market, the large reduction in the size of the body does suggest potential for a change of trend to the upside. So we should be watching the high of that current candle very closely. But if we do see a change of trend, potentially strong resistance at 526, as well as the solid support at 516.50. So as with the previous market, looking for a breakout in either direction. Now any breakout to the upside is likely to find strong resistance at the Tenkan-sen indicator, trading around the 531 region. And looking at the bands here with wheat futures, and here we see continued price activity down below the lower band, so suggesting that we have a very strong negative bias. Any rally here may find strong resistance at the lower band at 526.14. On to corn futures, and continuation of the trend to the downside for today's trading, making a lower high and a lower low, but breaching the lows of the past 3 candles, where we found a small area of support coming in about the 384.25 level. This is another black body candle, pretty much in line with the size of the previous black body, so net momentum is very similar to what it was previously. The sellers closing with control once again, and suggesting that there is a good likelihood of the market continuing to trend to the downside. Now we should be watching this area down to the swing low here at 375.66 very carefully if the sellers do continue with this first time frame downtrend, as we see these large shadows on the bottom of these candles representing solid upside price rejection from this area. So if the sellers are strong enough to test down to there, we could see buying come in once again, as we saw here previously. But any attempted rally off this current candle is likely to find very strong resistance at the Tenkan-sen indicator, and coinciding with this 385 level, which has been an important level in the past. So very strong resistance overhead. But we do have a neutral market in big picture terms, so no clear direction here in the long term time frame with the market trading within the Ichimoku cloud, but we do have a bearish market in the medium fast term time frame with the market trading below both the Tenkan-sen and the Kijun-sen. And looking at the bands here with corn futures, and this does put that medium-term time frame into perspective, and we have continued price activity down below the lower band, highlighting the very strong negative bias in this market. We've had now for about the 5th or 6th consecutive occasion the market testing just to within the lower band and being rejected from there, and it does suggest that there is potential for continued downside. Any rally may find strong resistance once again at or above that lower band, trading roughly about 382. And finally to the US 30-year bonds, and here we're seen for the second day the market testing to resistance at the 150.28 level, being strongly rejected from there once again for the second consecutive occasion. Sellers taking control of the market once again, but a very much smaller black body, so suggesting that the net momentum that the sellers have made is not as strong as it was previously. And also for the second consecutive day, the sellers failing to breach the 149.11 area, which is where the Tenkan-sen is trading at. So that's going to be an important level moving forward for this new candle as it's developing, as will the area at the 150.06 region, and in a zone moving up to the 150.28 level once again, where we've seen that strong price rejection. We probably do need to wait for resolution once again with this market, either breaching to the downside below the Tenkan-sen and then the 148.23 level of support, or to the upside through that 150.28 level of resistance. The likelihood would be more to the upside, or the greater probability move would be to the upside, in line with the market being bullish in the longer term and medium term timeframes, with trading above both of these Ichimoku indicators and just trading above the Tenkan-sen indicator. But the resistance up above is really quite strong, so quite some doubt about whether the buyers are going to be strong enough to breach that overhead resistance.